Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets.
Euro-dollar. An indecisive spinning top on Friday after the previous session's immediate countering bullish engulfing pattern. It was notably the first close above and outside the previously highlighted upper bear channel line, currently at 105.54 of the mid-July to date bear channel, which is currently 103.03 to 105.54, and is highlighted in bright red on my daily chart. It was also a second close up over the April 2017 low at 105.68. Now, going back to the bear channel, this originated in July, but its main effects were felt in early September when it caused a breakdown below the mid-March to mid-July bull channel, the one highlighted in dark blue on my daily chart. Targets for this original bull channel on the downside were a primary target in the 105.95 zone and a secondary much harder to reach target X1 in the 101.35 zone. Now, the primary target was achieved in late August, but the secondary target X1 is still open, though looking now very hard to reach, especially as the market has recently decided to use the February and March 2017 lows at 104.92 as a base. Please keep in mind the upper bear channel line drops down through this base of support within the next week and a bit, so something will have to give. It might just be that we have seen the first inklings of a new move, but it's still too early to say as yet. Now, so far today, the market continues to stabilize over the upper bear channel line, using the April 2017 low as a temporary base. Overhead, we have congestion at the Fibonacci line at 106.13 and the 2020 low at 106.36 before we see the declining short medium moving average, currently 107.01. Cable, aka sterling against the US dollar. A second indecisive spinning top on Friday, though I suspect it had aspirations to be a hammer pattern. The market continues to exhibit a wide-ranging indecision between the May 2020 low at 120.73 and the 50% Fibonacci line, the June 2021 to September 2022 move at 123.16. The main recent feature here had been the breakdown below and out of the March to August rising wedge pattern highlighted on my daily chart in bright red. The targets for such a pattern were a primary target in the 124.10 zone and a much harder to reach secondary target X1 in the 116.05 zone. Now, the primary target was achieved in mid-September, but the secondary target looks now very much out of reach as the market has decided to hesitate between the May 2020 low at 120.73 and the 50% Fibonacci line, the June 2021 to September 2022 move at 123.16. Now, so far today, well, not much. A small hesitation around the congestion at 121.51, but that is all right now. I continue to wonder if the action since mid-August may not have elements of a bearish halfway hesitation or double bottom about it all. It is still too early to say which it may be. Euro sterling. An indecisive spinning top on Friday with a long tongue on it. That gave it elements of a possible shooting star pattern. It was nevertheless a second consecutive close over the slowly declining long moving average, currently 86.93, and that's highlighted in gold on my daily chart. Interestingly, the market pierced but did not close over the next overhead resistance formed by the April 2021 high at 87.19. The market had recently been caught between the overhead long moving average and below by the twin supports of the rising short medium moving average, currently 86.16, and the medium moving average, currently 86.01. The action yesterday, if it continues to be sustained, now raises a question as to whether the move since early September may be a bullish halfway hesitation on top of the recent roof pattern. Now, the bullish halfway hesitation has a potential target X2 in the 87.95 area. You see, the overall bigger picture pattern has been the June to September roof pattern, with potential targets for this pattern of a primary target X above in the 87.42 area and a harder to reach secondary target X1 in the 88.18 area. The long moving average had capped the opportunity on the upside, but it now looks like the market may finally be free of it. What is more, on Friday, the market reached up and hit 87.40, 2 ticks away from the primary target X1, and enough for me to call it reached. Now, so far today, a pullback lower, down towards the long moving average, but pulling back up again then, when prices came a little too close to it. US dollar against the Indian rupee. An interesting if contradictory piece of action on Friday. An indecisive spinning top that could also be seen as a bullish harami. It continued to show the bearish power of the overhead combination of the October 2022 high at 83.77 and the breached, but so far unbroken mid-August date downtrend currently at 83.23. The bearish pressure had been enough to previously break the July to date uptrend currently at 83.26. This action is quite interesting as it pointed out a possible, if ramshackle, late July to date ascending triangle. I haven't highlighted it on my daily chart, but it's made up from the late July to date uptrend and the previously mentioned downtrend. The recent actions, if confirmed, will mean a break below the ascending triangle, and I can then set out possible targets for such a pattern. However, I would again caution you on the possibility of a false break here in either direction, and I would need further confirmation of this move to set it up properly. So far, the support of the rising short medium moving average, currently at 83.03, and the late September low at 8300, as well as the gap below from September between 82.75 to 83 even, have tempered the possibility of the start of a strong bearish action. Now, so far today, a lower open for test up to the short moving average, currently at 83.19, and a small dip have left us with what looks like an indecisive spinning top right now. US dollar against the Brazilian real. An attempted bearish engulfing pattern on Friday, but the market didn't quite make it. Prices still managed to push down through the combination of Fibonacci lines at 507.39 and 505.73, as well as the short moving average, currently 507.71, and not too far from the flatlining long moving average, currently 499.87. Overall, the market continues to be moving within the breached, but ultimately still valid, November 2022 to date bear channel, currently 470.45 to 516.95, and that's highlighted in bright red on my daily chart. The most recent incident involving this bear channel had been the upper bear channel line capping the market in early October. Meanwhile, below we have a whole load of supports consisting of the previously mentioned flatlining long moving average, highlighted in gold on my daily chart, then the upper trend line extension, highlighted in purple on my daily chart, of the August to September rectangle pattern, currently 498.06, the rising short medium moving average, currently 497.88, and the 50% Fibonacci line of the October 2019 to May 2020 move at 496.61. Meanwhile, above we have the interesting 38.2% Fibonacci line of the June 2019 to May 2020 move at 510.87 before the market starts looking at the upper bear trend line. US dollar against the Mexican peso. A bearish engulfing pattern on Friday as the market tried to reach up to the February 2020 low at 1851.71. The low that 3 weeks ago capped the market and again this time pulled back from it. It was nevertheless the second highest high since March. Interestingly, the close was back below the neckline of the January to May head and shoulders top, currently 1823.45, the one highlighted in purple on my daily chart. Overall, the market continues to consolidate its moves up and away from the long moving average, currently at 1772.46, and also the significant bright red neckline, currently 1804.53, of the July to September lopsided reverse head and shoulders bottom. Prices have already managed to achieve some notable targets on the top side. The primary target for the March to July descending wedge pattern, the pattern highlighted in bright green on my daily chart, as well as the primary target for the break higher out of the long-term September 2022 to October 23 bear channel, the pattern highlighted in dark blue on my daily chart. However, the harder to reach secondary target X2 for the descending wedge pattern, and also coincidentally the harder to reach secondary target for the bear channel, both at the 1894 even area, well, those are still open higher up. I also have not placed any primary or secondary targets topside for the reverse head and shoulders bottom as yet, mainly because we are still close to the neckline and because I like to see target X2 either reached or rejected. Finally, we have the previously mentioned September to date bull channel, currently at 1804.53 to 1888.30, highlighted in dark green on my daily chart. I'm beginning to pay close attention to this bull channel. So far today, we're a lower open, but a limited move higher back up over the purple neckline, if only just.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.